Hello and welcome to another update video about PEPE. So PEPE has left our micro support zone to the upside and the bulls turned up where they needed to, exactly at this 50% retracement at 176611. I mean, this is, as I mentioned in the last update, I'm still looking for higher prices on the PEPE chart. The question is, how deep is the pullback that the market is offering? This here looks bull flaggish, yeah, bull flag like. I'm not sure about the microstructure here. It is really messy. But the more the reliable and more stable support zone is this one for the larger degree. Okay, so obviously the idea is that from this swing low in August, we had a wave 1 and a wave 2. This here would be a wave 3, then we get a wave 4 and a 5. And the main question on the smaller time frame at the moment is if this third wave is actually still unfolding. And my view is yes, possibly one more high in wave 5 of C of 3. We're dealing with ABC structures because of the messy subwave structures, obviously, because, you know, also here wave 1 is an ABC. You see that ABC. Okay, you know, you can interpret that in different ways. But whatever, you know, it doesn't matter so much. Important is to understand, okay, we've got a micro Fibonacci support area. Based on the micro, ideally the bulls needed to turn up before getting a sustained break below that 50% retracement. But as I said, it's not super reliable. It's a bit messy. These overlaps, yeah, make it a bit difficult to count the microstructures. So we've rallied from the lower boundary line of our upper micro support to the upper boundary line of the wedge pattern or trend channel. Actually, if I draw the lower boundary line a little bit better, then it looks more like a channel. So as long as we're in the channel, I mean, we respect the channel, right? So we haven't really broken out yet, but we've moved from lower line to upper line. And again, it's now that time to be watching for a potential upside breakout. And if that happens, I mean, the first target is typically the beginning of these corrections, so the top. So we talk about 257525. But if it's the fifth wave, we wanted to get at least to the next one or two upside Fibonacci levels. We've got 274473 and 307805. These are the next levels to watch. If we break below the swing low that formed on Wednesday, then we're likely going to target the next Fib level at 152266. That wouldn't be really bearish, but it would mean that the upside breakout attempt clearly failed. And we are likely not in this wave degree of wave 4. We are likely in the larger degree already, right? But I mean, you could always say this is an A wave, B wave, C wave, and then we go higher. So overall, this is the more relevant area for me. And I would see this entire structure as a range all the way down to 109,325. So price could go a little lower, go a bit higher, go a bit lower, without anything really that's meaningful. But we are still looking for higher prices as long as the 109,325 level is holding. But for those who are looking for the short-term answer, well, at the moment at least, I think we can watch for a potential breakout, but it's not broken out yet. And we're just now there at this decision moment here. Yeah, don't find this the most attractive setup anyway, due to the weird proportions, bit unclear about the micro count. It's only a wave 4 anyway. We had a few 1-2 setups that performed well in the last few days, like AVAX and FET and Tau, and you know, those are typically the ones where you have some really clear parameters because you know when it's invalidated. Yeah, that's not so clear when we're dealing with these wave 3-4 patterns. But that's the idea about PEPE. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye bye.